Welcome to Slackin' Off with Brady Slack.
Welcome to another episode of Slackin' Off. I'm your host, Brady Slack. Today, you guys have a treat of listening to me. I've had a couple experiences in the past couple weeks that I kind of want to highlight in today's podcast episode. It doesn't come as a surprise to me that in every Facebook, Instagram, or online poll that I see where people ask the question, what do you wish they would have taught you in high school, or what is a core curriculum that they should teach in high school that they don't, what's something that you do as an adult that you never learned about in school, whether that be at college or high school. And without fail, every single time, I'm not a betting man, but I would put money that every single time one of the answers is taxes. And that's very true. They don't teach people taxes. They don't teach people, how taxes work. I think a lot of people only realize that the deadline for taxes is April 15th, only because that's what their parents have told them. And now now as an adult, they realize, okay, shoot, there is a day that I now have to file my taxes by. They get their email from TurboTax. But that being said, there's a lot of things that taxpayers don't realize that one day end up coming to bite them in the butt. And so today I kind of want to highlight two experiences that I've had in the past couple of weeks with some clients that we've had to share with everyone. And I hope everyone can understand that you as an individual living in the United States you are a partner with the government, whether you like it or not. Okay, and I'm not the biggest fan of this, but this is the easiest way for me to help you understand that you are a partner with the government, and because you are a partner with the government, there are certain things that are required of you, and there are also certain rights that you have, certain opportunities that you have because you are a partner with the government. Now, it's happened quite often, but it happened a couple of weeks ago where a client, they got a letter in the mail from the IRS. In fact, sorry, let me back up. They got a letter in the mail from a collections agency. Now, if you weren't aware of it, now you know that the IRS, because they have received a lot of funding from the quote unquote Build Back Better bill last year that was passed, the IRS has received quite a bit of funding, and they've been able to catch up on the backlog that they experienced during COVID 2020 into 2021 and 2022. And because they're caught up on that, they're now in a position to be able to send out letters, which they had put on pause because they needed to catch up on all the backlog, to collect on a lot of the taxes that some Americans owe. So myself included, there were some amounts on some of my accounts that I had no idea that I supposedly owed, and I'll give you my experience here in just a minute. But yeah, the IRS now is at a point where they have the ability to send out letters. And this client got a letter from a collections agency. Oftentimes what will happen is the IRS, if they're unable to get a hold of the taxpayer, will send that amount that is due on the account to a collections agency. And the collections agency obviously is incentivized to collect on that debt a little bit better than the IRS is. But they'll do so a lot more frequently and with a lot more communication than the IRS would as well. So that the chances of them collecting on that debt on the account are a little bit higher. But this client, whether they didn't realize that they had an amount owed or they forgot that they had an amount owed, was very surprised when they received that letter from the collections agency. 10 out of 10 times when a client receives a letter from the IRS or the collection agency on behalf of the IRS, they start to freak out. They get really worried. Everyone thinks they're going to jail because they owe the IRS a little bit of money. They get upset that something wasn't done right or that there was a correction on the return. And for some reason, worst case scenario always comes to the front of their mind. Well, so what happened was we got on the phone with this client. We let them know, hey, this is what we are seeing based on on your tax returns that were filed. Here was the amount that you owed the IRS because of the return that you filed, the income that you claimed. So we need you to do a couple things. One, we need you to go back and find the amount that you paid the IRS for the tax that was due on your return. Once you do that, then what we will do is we will contact the collections agency on your behalf with the power of attorney to send this matter back to the IRS because we've been compliant, and then we need to contact the IRS, which we will do on your behalf with the power of attorney to have them update the account, remove all the penalties and interest because you paid the tax in a timely manner. Well, come to find out, this client had received their tax return, but they had never sent the check for that tax. So this individual owed that tax. Now, we were able to take this client, obviously with a power of attorney, go through the collections agency, have them transfer this matter back to the IRS, which you're able to do, and request a penalty abatement for first-time failure to pay. And there's a couple instances that I want to go through here with individuals so that they understand some of the rights that you have as a taxpayer. Because I mentioned a few things in this transaction that a lot of people don't know they have the opportunity to do, such as, first-time penalty abatement waivers, communicating with the IRS, and there is a taxpayer bill of rights. And what that taxpayer bill of rights states are all the rights that every individual or every tax-paying entity has in the United States as it relates to their taxes and their relationship with the IRS. So I'll run. I believe there's 14. I'll run through all 14, and I'll kind of give you a little synopsis about some of them. But these are things that we never went through in school. To be honest with you, even going through my education, there's something that we really don't even cover as tax accountants in our education. There are things that you just have to understand, I guess, or you have to know for yourself. So anyways, these 14 are as follows. The first right that everyone has as a tax-paying entity or individual is the right to be informed. You have the right to understand what you need to do to be compliant with tax laws. You have the right to be informed about updates, about changes, about correspondence, and you have the right to be informed. Obviously, it would be very problematic if something happened, you weren't informed about it, and it caused a liability on your behalf. So you do have the right to be informed. And there's many ways that the IRS does inform us about updates, changes. They do so through publications. They even have social media accounts. So there's a lot of different ways that we can be informed. Okay, we can even request to be informed about different things. The next is the right to quality service. As an individual, you have the right to professional assistance by the IRS. You have the right to be spoken to in a way that you can clearly understand what is going on. And you also have the right to speak to an advisor about inadequate services. If you feel like you're on the phone or in an examination or an audit with a representative that isn't treating you fairly or isn't helping you understand the implications of whatever it is you're discussing with them, you do have the ability to request to speak with a supervisor because of that inadequate service. Okay. You also have the right to pay no more than the correct amount of tax. Now, as an individual, you should not pay more taxes then you are legally responsible to do so. And I would argue that you also have the obligation to find any legal opportunities to reduce your taxes that you are legally able to do so, by as much as you are legally able to do so. So that is an important right that us as individuals and business tax-paying entities have, okay? You have the right to challenge the IRS's position and be heard. The IRS is a government agency. They are not always perfect. A lot of the recordings that they do on your account might not be accurate. They do a lot of guesswork. Okay, if certain forms have not been filed or tax returns have not been entered. And so as an individual, you do have the right to challenge the IRS's position. You have the right to be heard with the challenge that you have, to investigate and make sure that all of the information that the IRS is reporting or requesting from you is accurate. Okay, you also have the right, you also have the ability in this right for timely objections and documentations to be promptly and fairly filed. I think a lot of times what happens is the IRS will send out a letter and say, hey, we need 60 more days to process this request. One thing that I found that's actually helpful for a lot of our clients when we're communicating with the IRS is that when you address the IRS, make sure that you give them a time frame and within which they have to respond to. Sometimes, again, they're backlogged. They're a government agency. I understand that they're busy. But at least by doing so, you provide them with burden of proof that you are responding in a timely manner, and you expect them to respond in a timely manner. That is one of your rights. Okay. As a taxpayer, you have the right to appeal an IRS decision in an independent forum. You have the ability to challenge, again, what the IRS is saying. You have the ability to appeal what their decisions are through a court of law. In an independent form. That's how our court system works here in the United States. If you do not agree with the decision that the IRS has made, I will advise you, if that is the route you take. Sometimes that can be very costly. Sometimes that can take a lot of time, and so just make sure that you do work with professionals. Whether you are challenging something that the IRS has said, or a determination, or an estimation, or they've made a decision and you want to appeal that decision, make sure you do work with a professional, because those can be very technical situations that you'd get yourself into. You have, as an individual or a tax-paying entity, the right to finality. You have the right to know the maximum amount of time that you have to challenge the IRS's position, as well as the maximum amount of time that the IRS has to audit a particular tax year or collect a tax debt. As an individual, you also have the right to privacy. All of your information should be kept private, and they will not be more intrusive than absolutely necessary with respect to due processes. Okay. You also have the right to confidentiality. You have the right to retain representation. Again, with all of our clients, when something does happen with the IRS or a state tax entity, we are always the first to either get a power of attorney filed for them, or if it's in a timely manner, hop on the call with the client, request that we speak on behalf of the client, which you can do for that phone call, and help them take care of whatever it is that they're dealing with. Okay. You have the right to a fair and just tax system. Okay. Again, as a taxpayer or tax-paying entity, these are your Bill of Rights. They're not something that we ever talk about. They're not something that you ever learn about in school, whether you're a taxpayer or a tax professional. But we do have to understand them, because that is how our relationship with the IRS is going to look. Okay. Again, and I can't say this enough, when you work with a professional, that relationship should be such that when there is something that goes on with the IRS or a state tax authority like the State Tax Commission, it's imperative that you communicate with that tax professional what is going on and allow the tax professional to do their job. In another phone call that we had with another client a couple weeks ago, in regards to some amended returns that had not been processed by the IRS, we were able to, with this client, hop on a phone call and in a matter of about 35, 40 minutes, talk with two different agents at the IRS and discuss with them the matter, figure out a plan that we needed to do to make sure that they got the tax returns, that they processed the amended tax returns, and that the tax amount owed would be taken care of. And we were able to do that in a matter of 35, 40 minutes because I was on the phone call. She gave permission to the agent for me to speak on her behalf on that phone call because we weren't able to file a power of attorney in the required time frame. And we were able to get that issue resolved, or at least understand how we could get the issue resolved. I think a lot of times what happens is you get a letter from the IRS, you get really nervous about it, you're not sure what to do, and so you try and take care of it on your own. And I promise you that ends up taking longer. Um, may or may not have experience on how to deal with the IRS, what to say so that you can get something accomplished quicker. And so make sure that you are working with your tax professional, to make sure your tax accountant, your tax attorney, to make sure that they communicate on your behalf with the IRS. Okay. The second instance that I had, and this is not necessarily as tax specific related, but it does have to, it does revolve around how you work with your tax professional. With the IRS announcing that, they hope to have 70% or some other number of all tax returns filed electronically and processed directly through the IRS website, you'll start to see that the tax accountant's way that we work with clients will change. It is my opinion that a tax professional who just files taxes will become less and less needed as time goes on. In fact, there are other countries, lots of other countries actually, who already have an automatic filing system. And I'm not talking an automatic filing system like using a software like TurboTax or Intuit, or H&R Block has their own software. I'm saying, hey, you would have a login with the IRS, which you already do have a login that you can check notices, you can check balances, you can check to make sure tax returns are processed, et cetera. But through that same portal, you will be able to go in, input your W-2s, 1099s, expenses, things like that, and file your return, right? It will become very automatic, and it will eliminate the need for an accountant to file those returns. However, similar to any other function that software has right now, you still have to have the human element on decision-making abilities. And so tax accountants will become more valuable as it relates to tax planning, understanding the law, technicalities, and dealing with the IRS. And in that, you would still be able to have them file your tax returns if you needed to do so. If they were maybe more complex, you had businesses, rentals, passive income, different things like that. That being said, the way that you work with your accountant is also very important. I've mentioned before that, our most successful clients, they work with us as a partner. They view our relationship as a partnership. We tell them what to do, and they do what we tell them to do. And the clients that pay the fewest amount of taxes and continue to make more money are the ones that do what we tell them to do. The ones that are frustrated, the ones that sometimes get bills, the ones whose tax returns always get filed late, are the ones who just they view taxes as an expense, and they view my relationship or what I do for them, my service, as an expense as well, not an investment into their financial abilities. Now, we had an instance with a client a couple of weeks ago where I onboarded this client. I was on that initial phone call, and we set the expectations of what services were going to be performed for this client during the engagement that they were going to be performed for. And there was a couple other issues and questions that this individual had in relation to one of their businesses that I believe we were going to be able to resolve. And we let them know what the pricing was going to be for this specific client. We were going to be doing cleanup on last year's accounting records. We were not going to be doing any planning. There was nothing residual. It was just, hey, this client wanted their accounting to get up to date, and then they wanted help filing the previous year's tax return. Fairly simple, so I thought on our end. We get into the engagement, and then all of a sudden there's a couple other issues that she was trying to resolve that we were trying to help get squared away that weren't necessarily a part of the engagement. However, part of it's probably my fault because I didn't stick to what was in the engagement and let her know that any other additional services would be billed at our hourly rates. But I try to give people the benefit of the doubt, and I try and be service minded and help this individual. And it got to the point where we were spending an exorbitant amount of extra time doing these additional tasks that were not involved in the initial engagement. This individual got a bill that was substantially more than what she thought it was, that did not include any of the hours that it took to do any of the other items and needs that she had. It was just the cleanup work and the tax return work. And she was very concerned, as she understandably would be. However, she, in discussing this issue with her and her concerns, I realized very quickly that she just signed the bottom line on our terms and service agreement and on the proposal papers, and she didn't actually read through them. What I said in the initial conversations were not any different than what was in the terms and service agreements. In fact, I didn't even give her a quote. I never quote on hours for cleanup. However, she had in her mind that because it was only a certain time period, it was only going to take a certain amount of time. But based on her transaction count and the complexity of her chart of accounts and her financials, it did take a substantial amount more time than what she thought it was going to take. So she was very concerned about this bill, which we were communicating to her, but she didn't really pay that big of attention, I guess. That's the only thing that I can conclude at this point after discussing with her the matter. But with all of our clients, when we begin working with them, we always issue them a proposal. And in that proposal, it states what they're going to be charged and what services are going to be included in what we charge them. And then it's also going to include what we expect from them as a client. It includes the terms and service, more the legal agreement that we have with the client. And then it also includes the ACH, when we're going to be charging them, what we're going to be charging them, and then them giving us permission to charge them. And I think a lot of times what happens, I'm guilty of it too. We go into an agreement or we go purchase something and we maybe don't read that fine print. But because the landscape of how you work with your accountants are going to change, my recommendation would, again, after this conversation, not only be highly involved and highly educated on what the IRS or how the IRS works and how you can better work with them or better educate yourself so that when something happens, you can work with them in an effective manner. But you should also understand how your accountant is going to work. For the sake of this conversation. For another, it might be your attorney, who knows. But make sure you understand how they work. What are the services that you are engaging them to perform? What is your relationship going to look like with them? Because we are a relationship type, we are a relationship based species. We function better statistically through lots of different studies will show that we behave in a way that requires us to have and build relationships, effective relationships. It's not any different when it comes to money and the relationship that you have with your professional. The better you are at building that relationship with your professional, the better success your business is going to have, the more money you are going to make, and the more taxes you are going to save. It's also going to allow for a much better understanding. Sometimes we get into situations where, we're 3, 4, 5 months down the road from a problem happening, and then we find out that the client had a problem and they're unhappy with our services. If you would have told us 4 months prior that, hey, this was bothering me, or I had this question, or I didn't get this answer, we would have been able to handle it right then and there. But if we let it go for so long, then at that point, there's really no opportunity for us to do so because of what the client has built up in their mind, or vice versa. And these, again, like I said, some of these happen very regularly for us. It's unfortunate that does have to happen. We always try and do the best we can, but we're not perfect, and no one else is perfect. So some things aren't going to go like we planned. But it is our ability to improve upon what we haven't done correctly and make better use of that. If you would like to know more about what we've talked about today, maybe your Taxpayer Bill of Rights, all of that information can be found on irs.gov. I think the URL for the Taxpayer Bill of Rights is just irs.gov/taxpayer-bill-of-rights. You can also Google Taxpayer Bill of Rights and find that and read a little bit more about that. There's also on the same page collection information, taxpayer advocate services, credit information, or where you can go to find reports from Congress on whatever the IRS is putting out. Another tool that I would recommend that everyone use and get acquainted with is when you go to irs.gov, there is an account that everyone can create or everyone has access to, where you can create a login through ID. I think it's ID.me or whatever that service is, where you can go in and create an account and view your account history. You can look at previous tax returns that have been filed and processed. You can make sure that those tax returns have been processed. You can go in and you can check if you owe anything to the IRS. You can go in and look and see all of the different notices that you may or may not have received over the course of the past several years, whatever the statute of limitation might be for those certain returns, or the time frame within which the IRS has to audit or collect the tax on those returns. And you can see the communication that the IRS might have given you through there as well. Again, like I said, it would be my belief that, or my opinion that in the future, through that account, you'll also be able to maybe communicate directly with the IRS. You'll also be able to file automatically your tax returns through that account, through the IRS, if they're not that complex. But that account is really important. And I recommend that all of our clients have access to that account or create that account. So again, that they can go in and at any time get tax return transcripts if they're trying to qualify for a loan quickly, or look at notices and letters that may have been sent that you may or may not have received, or look at balances, scheduled payment plans with the IRS, different things like that. And again, this would be another invitation to communicate with your professional, whether that's an attorney, a financial advisor, or your tax accountant. Set up a time to meet with them. Set up a time to do some planning. We're starting to get closer to the end of quarter 3, quarter 4. And now's a great time. It's not the best time. The best time was yesterday or January or even July of last year. But now's the best time, if you haven't already started, to start to plan for what your taxes are going to look like when you file in January, February, March, or April. It's also an even better time to start planning for next year. If you have an idea of what your income is going to look like next year, what are some things that you can do to help minimize that tax? I promise you, by doing so, you will be able to make a lot more money and continue to pay fewer taxes. If you have any questions, please don't hesitate to reach out to me on Instagram. Send me a message. Make sure you put in there the keyword tax, and we can set up a consultation. You can also go to my YouTube channel. You can also like and subscribe here so that you can continue to get more content. And again, like I said, if you have any questions, please reach out to my team, and we're happy to help. This was a quick 30 minutes that I got to do for myself today, and I got to slack off just a little bit, but I hope you guys have a good rest of your day. And thanks for tuning in to Slackin' Off. Have a good day.
Thanks for tuning in to Slackin' Off with Brady Slack.